S&P 500, the stock market just opened up, by the way. And with the stock market opening up, you can see we are back towards those all-time highs, tested them here this morning. SPX is at 61.25, guys. Really a crazy couple months. I am fully invested. It feels really good, to be honest, to be fully, like, what I mean by that is I trade on a stock brokerage account. So I have cash in the account, right? So I don't trade with leverage. It's not lot sizes. It's not futures contracts. I trade shares. So when I trade shares, there's like money in the account that you trade for shares, right? So I have like shares of stock, in this case, SPY, and I'm currently fully invested. And all that means is that I have pretty much all of the cash in my account is allocated to positions. I'm long some things that are working, like SPY, some things that are not working so well, like TLT, right? I'm down $2,600 on this position. I also have SMH played right now. This one's going pretty well. I'd love to see this thing follow through to the upside. So I have SMH, which is a semiconductor ETF. I'm also playing Bitcoin, right? So I've got IBIT. So I have a position here. It feels really good with markets at the highs to be still fully kind of locked in and trailing stop losses on a lot of positions. It's a good start to 2025 for me. Let's hope it continues to play like this. I know that it won't, right? Nothing is this easy forever. I went through a drawdown period in December, and so it's nice to be out of the drawdown and hitting fresh highs in the account again. So when we get into a situation like this, I always make a point to talk about this topic here next. Mine's loading. Yeah, no, it's my computer. The Edge Finder is working fine. It's just my computer for some reason is not keeping up this morning. What's the advantage of the Edge Finder? The advantage of the Edge Finder is it scans a ton of data for you and it generates bullish and bearish readings for your favorite charts. It is like the system behind what I do, right? So like when I'm interested in a chart, I don't look at the technical chart as my basis for why I want to buy something or sell something. Why is the Edge Finder, right? The Edge Finder helps me source data quickly. Why has nothing to do with the technical chart, right? Because technical charts can be deceiving. Sometimes a perfect technical setup does not work out at all. A technical setup does not verify an idea for me. The fundamental analysis and sentiment analysis that the Edge Finder assists me do is the reason why I might take a trade long or short. When is the technicals? And I talk about this often, this kind of three-part system: the why, the when, and how much, right? How much do you want to buy? That's your risk management. The when is the simple technicals, and I use the simplest technical analysis ever. And I love to say that because I think a lot of you guys in the audience, some of you guys who are more experienced, you're gonna maybe agree with me on this, maybe you won't, but I have actually found that I went in a big circle in my trading career. I started out with a simple technical analysis. I said, look, support and resistance, simple trend lines, market structure, that stuff anybody can pick up within a week or two. It's really quite simple. And then I said, well, this stuff is not working very well. It's not, doing all that for me. So what did I do next? Well, I went to more advanced strategies. And then I, was like, well, maybe this will be a better approach. And I tacked on a bunch of indicators to my charts. And, then I went into like more advanced price action stuff. And then, I dabbled in the more market manipulation, accumulation, distribution manipulation, all that stuff. I dabbled into that for a while. And then all that led me to, this is not working any better than the simple technicals. And then when I discovered and started implementing, actually understanding why markets are moving, aka the fundamental analysis side of things, what central banks are doing, what governments are doing, what economies of the world are doing. Once I started studying that and seeing, oh, the market is reacting to what those things are doing. It's not reacting to technical charts. Technical charts are just showcasing the aftermath of those key forward-looking events, fundamental analysis. So I incorporate fundamental analysis to actually guide at the forefront of what I'm doing. That's why I take certain positions. Why I'm bullish on the S&P 500 right now is not because the chart actually looked terrible recently. Very choppy, indecisive, lower lows, lower highs, right? That would not have told me to buy the S&P 500, but the fundamentals did. And that actually helped to catch this wonderful trade to the upside. So, the technicals, yes, we had some support levels here, but you had lower highs. A lot of people were getting really bearish on the S&P 500 when it was headed towards this level, saying, oh, this is it. And then we had a false breakout, reversed course, and went higher. You can choose whatever you want to look at. You could say, oh, that was the signal. Obviously, in hindsight, you can do that. But for me, I never found success from really, advanced technical analysis. That was a big waste of time in my trading career. What led me down the right path was finally accepting I got to put in the hard work and study the same things that hedge funds do, which is fundamental analysis, which is why later on, when I started doing that, I was like, okay, why don't more people do fundamental analysis? It's because that stuff is hard work. There is a ton of effort that goes into fundamental analysis, right?
The Edge Finder is the #1 trading tool for 2025. The Edge Finder is constantly scanning for new data and information to give you the advantage when it comes to trading your favorite assets. Easily stay up to date with the latest sentiment, technical, and economic data, all within the Edge Finder. The Edge Finder scores on 12 different metrics to give an overall bullish or bearish bias, so you can have more confidence when you're ready to take a trade. The Edge Finder is a one-time payment, which means all future updates and improvements come 100% free of charge. Start your new year off right and upgrade your trading with the Edge Finder.
PMI numbers coming in here, and wow, okay. We're ripping here on S&P, NAS. Let's see what those numbers are looking like. Okay, I just sent a message to the support team. At least I'm not going crazy. Okay, Flash Services PMI came in 52.8. Wow, that's a big miss. 52.8 compared to 56.4. There was a beat for manufacturing. Manufacturing actually a positive number, 50.1. They also revised the previous one higher for manufacturing. Oh, okay. Okay, guys, I got an update from support, aka Julie, who answered this question for me. It's not Edge Finder, it's Google. Google is having downtime on Looker Studio, which is what it's based on. Gotcha. So don't worry too much. Edge Finder seems to be working fine. It's just the Looker Studio side is not showcasing correctly. Anyways, let's see. So we also revised the previous number slightly down, 58.5 here, 52.8 for services. Services were a little bit light. Dollar index seeing some downside off of that. Let's see yields. Yields are possibly very important here. And I think you have to remember that if the market is ripping in one direction, you get, somebody says I hate mixed economic data. Yeah, I mean, this is kind of mixed, right? You have slightly positive, slightly negative. I mean, that's actually a miss in services. But if there's a mixed data point, typically the path of least resistance is to go with the existing trends, which has been strength for, stocks, indices, crypto, etc. 10-year yield pretty much unmoved off of this. 2-year slightly lower, so not a big reaction. Definitely signaling more of a mixed reaction. Dollar index on the 5-minute chart, you could see not a huge move. So pretty mixed response here from the market. Bitcoin's up 2% here, trying to make its way back to the highs. Same as my S&P trade, I'm looking for this thing to take out the all-time highs. This level of resistance is what I'm watching. What I'd like to see, guys, for me to tighten up my stop a little bit further. Well, actually, what I'd really like to see as like a qualifier to trail stops is I would like to see a strong closure above the previous all-time closing high, which for Bitcoin is sitting around 106,000. And with indices hitting fresh all-time highs, I'm wondering, what are your thoughts on them? Are you watching any for entries? Are you in any trades? What are your thoughts on the indices right now?
Yeah, I think everything looks good. I was on Nasdaq on a buy, also US 30. So both of them actually on a buy.
Very
So
nice.
I think Trump, he was actually speaking yesterday, and he mentioned that Federal Reserve, they have to cut the rates. And I think that actually pushed the market to be quite positive, but it's been positive for a while now, but that will add something, because if the rates are going to go lower, that is going to be good for the stocks. And yeah, I think that it's actually something we actually looking at. Another thing is the proposed deal for AI. I think three companies, Oracle and the other ones, Oracle, OpenAI, and the other bank, I think. So about AI, I think that can also boost tech stocks. So I think that is actually a good thing for them. I think going further, I'm expected to see some very nice moves.
Kenzo, do you own or trade any individual stocks?
Come again?
Do you trade or own any individual stocks like Oracle or Microsoft or Amazon or anything like that?
Yes. Unfortunately, I trade some local companies. So yeah, I will be actually trying to add some like US companies going further.
Okay. Yeah. No, I was just curious because, of course, some of the individual names, like you mentioned, Oracle and recently Apple's been down. It's been very interesting to kind of watch the tech trade idea. And you know what's interesting too, Kenzo, is that when we heard from Trump yesterday, there seemed to have been a distinct kind of mention or a shout out to the U.S. being the capital of AI as well as crypto, which I thought was very unique, hand selected two kind of parts of the market, arguably the most exciting, most kind of most watched areas of the stock market. You know, whether you like or dislike Trump, he definitely seems to be a bit of a hype man, and the idea of him kind of adamantly supporting AI and crypto definitely may have also helped to kind of get the stock market excited yesterday. Of course, we'll see if that has the follow through that many are hoping for. But the NASDAQ looking really strong. We're at the highs of, and I want to ask you, of the three, you said you've been trading NAS and US 30. Do you have a favorite in terms of like going into this year? Do you think, and here's maybe a bigger question for you, if you had to pick one of the three for 2025, at least for now, which would you say is your favorite for upside?
I will go with Nasdaq because
Okay.
it's pure tech companies.
Yeah, no, that makes sense because again, with the growth of the Nasdaq and with all of the kind of push for AI, Nasdaq has been a major winner in that area. I actually wonder if this year we will, however, see some more participation from some of the places that have not kind of participated as much. The divergence between, for example, the Dow Jones as well as the Nasdaq has been pretty immense in the last 2 years. If you look at the performance of the Nasdaq and compare it with the performance of the Dow or even the performance of the Russell, what you'll notice is that the Nasdaq has greatly outperformed those other two areas because of what you just mentioned, Kenzo, the high exposure to technology. But I wonder if perhaps there is room for more broadening, is what they call it, beyond just technology companies. Like, for example, industrials and energy companies and healthcare and these other areas of the market that have not perhaps lagged a little bit. I wonder if they will participate a little bit more than they did in 2024. Last year, it was like most stocks made about 10% gains, and then the ginormous tech companies made like 50% plus gains. They made ginormous moves like Nvidia and, as you mentioned, Oracle and companies like that had phenomenal years last year. So, I think that personally, I think that the participation of multiple areas of the market this year could be impressive. I think my base case for this year is more participation across the board, but I do also agree with you that technology stocks will probably continue to play a really key role in the overall earnings. So I guess my next question to you is, with the indices, how are you looking to play them? If you're in positions, are you trailing stops? Are you looking to take profits? Are you waiting for pullbacks? What's kind of your next step for trading on the indices?
I like to actually hold a little bit longer, but currently I am expecting to just to close because we still actually trying to guess what might happen, especially if we look at Trump. If you still remember, Trump used to say he will be adding 100% tariffs on China. And the last time I checked, he actually added 10%. And he started to say he likes President Xi and stuff like that. So which means he's no longer aggressive that much. So now those companies, they might still move that much and stuff like that. But I feel like along the way, yes, I need to get out. Like now I can say they are overbought, but the trend can still continue. So obviously we are heading to the first financial year, maybe February, March there, we will have some reports from all these companies. So mostly before that, we tend to see the market starting to go or selling or going lower, which means we have to be ready. If the market starts to sell, we need to get out and buy again when the market is at the lowest level. So it's good to hold longer, but along the way, I have to cash out, you see.
Yeah, no, I think that's a really kind of level-headed approach. If you think about it, if you were buying some of these dips, you have to ask yourselves, well, at what point do I, look to capitalize on some of the gains that I've made? So I don't dislike the idea of, especially with Trump being so volatile, right? Whether, again, I say this every time, but regardless of your politics on it, he's a volatile guy. He has a lot to say. He has, he yesterday called out the CEO of Bank of America on the greatest or the largest economic televised event possible. Called him out by name. I mean, called him by his first name, Brian I forget his last name, but bank CEO. He called him out right in front of everybody. So he clearly, regardless of your politics on it, he's a very volatile guy. He says his mind, and with that, a lot of volatility usually ensues. So I think that even though I'm positive on the indices, and it sounds like you're in the same camp, there is room for large pullbacks within this year's move. We may see a 10% drop in the S&P 500, and that still could be very constructively bullish, right? So playing for pullbacks may be wise, rather than just kind of buying highs and hoping that they continue to go higher. A very hot topic right now in markets is gold, which is sitting just near its all-time high as well. You've got a little bit of everything rallying, and what is this signaling to us? Is this signaling that there is possible kind of uncertainty ahead? Typically gold does shoot up when markets are worried about something, or at least there's an increased risk of something happening. There was a lot of stuff that was said yesterday. I actually, you pointed it out well. He seemed pretty soft on China compared to expectations, but actually kind of stronger on, Canada and the European kind of regulations against U.S. companies. So maybe there's some uncertainty there. Maybe there's some rocky roads ahead, and maybe that's why gold is up a little bit. You also had a little bit of give back in the dollar index. So what are your thoughts on gold right now? Are you bullish on gold, bearish on gold, neutral?
I think I'm actually neutral. I think maybe the main reason for gold, remember, gold started to move like this, especially between Russia and Ukraine war. So, and with the what do they call these things that they did on Russia? So it means
Sanctions,
all those
yeah.
investors in. Come again?
Is sanctions on Russia? Yeah.
Yes. So it means most of those investors in those countries, most likely they don't really have access to a lot of US stocks or let's say other stocks, because everything's not performing very well, or they are not really allowed to go outside. So which means we have to buy gold. But the thing is, Trump, he said he's gonna try to resolve the issue between Russia and Ukraine, and he still kept doing that. But now he changed and said, okay, maybe we can able to do that within 6 months. It's no longer over 24 hours. So which means if the war is still going to continue, what will happen with those investors? I think they will still keep holding gold or keep buying until they think, okay, it seems like things are now going to go back to normal. Then they can actually focus on other stocks or maybe sell their gold and stuff like that. So at the moment, I think it's because of Trump. If maybe they were able to do that within a week, or if you can have a way to navigate the issue of Russia and Ukraine, I think there is no way that gold will keep going up. So, but at the moment, it's like, okay, let Russia and Ukraine war continue, then we will see what we can do along the way. So it means gold can still actually go higher.
Yeah, no, that's actually a really good point. Trump made many claims to stop the war in Russia within 24 hours, which Trump has a tendency to make ginormous claims, wanting to, for example, annex, or not annex, but purchase Greenland into the United States. So there's a lot of big kind of claims. The concept of Russia and ending the war within 24 hours, perhaps, as you're kind of pointing out, every day that goes by that there's not kind of a formal meeting between Putin and Trump happening, perhaps that risk of Russia not rolling over and kind of stopping the war with Trump in office, maybe that persists. So I guess maybe there's a little bit of a hedge happening where people are like, well, we don't know what's happening there, so let's stay invested in gold for the meantime, and in case there is some kind of bigger fallout or failed negotiations or something like that with gold. So
overnight, the Bank of Japan raised rates to 50 basis points. You would think, looking at the currency strength chart, that they didn't do anything, but we've got dollar weaker, yen weaker, Swiss a little bit softer as well. Pretty choppy on the volatility front for the Forex side. The dollar's been a little bit softer. We'll have a look. I have my Aussie dollar position that's actually in profit right now. We had talked about this trade. This is one of my pulver alerts. We're back up to this pocket here. I can just close the trade out for a very small win. I'm willing to take this a little bit further. I think if we're going to see some flows out of China, we start to see some commodity pairs coming back and benefiting and outperforming the dollar, I think that the Aussie dollar may have what it takes to come back into this area. I wouldn't get super aggressive on these profits, but if we come back a little bit further towards like 6,400 or so, then I'll probably take some profit on this Aussie dollar position that I scaled into. So I was in at 63, 62, not the 6,000 that didn't get filled. So I'm in two positions here. And if I get back to 6,400, that would be 90 pips and 190 pips total. So I'm going to set a chart alarm here around 63. Let's go 63.6375. Oops. 6375, and that's coming right back into the support zone. I'll even go, I think 6350 is fair. I'll edit that to 50. 6350. Okay. So if that chart alarm gets activated, I'll probably just take the profit. Have a look here at New Zealand dollar. Same thing. New Zealand dollar's back to break even on 3 fills. I got filled as support, took it down a little bit lower. There's a pocket there around 57.50. I'd like to see if it pulls back towards this 58 to 58.50 zone. Let's put a chart alarm here around 5,800. And consider getting out. Okay. So let's look at the dollar index really quickly. So dollar index is pulling back, which I'm totally fine with. I had said look at this support zone around 106 to 105.50. If the dollar pulls back, that's great. I hope that yields will follow. We will find out more because next week on Friday we have PCE numbers. Next week on Wednesday we do have the Fed comments. I mean, right now we have, and I'm sure there's the media is going to make a big deal out of this. Like, what did Trump say yesterday? Demanding that interest rates go down. It's like, idiot. We can't have interest rates go down. We can't have a more dovish Fed. Look, they're already freaking dovish. They cut 100 basis points in the face of inflation going higher. Like, the Fed doesn't have to cut rates. They shouldn't be cutting rates. If they cut rates, that's going to be way worse for the market, in my opinion. We have all the data that's showing that inflation is going higher, right? And next week on PCE, it's forecasted, I believe, if it's actually on the calendar, I believe next week on Friday, if there's a forecast. So we have PCE. This doesn't show. I'm going to go to the Bloomberg calendar. And I'm just going to look at Wednesday, or I'm sorry, at Friday next week. So I'm just going to look at the 31st for next week. And here's the news. Are there forecasts? Son of a gun. So there's not forecasts. Crap. But we can go this. We have all the news at 8:30 on Friday. We'll just get into this zone. We got GDP for CAD, but I'm looking mostly at PCE. So the PCE price index year over year is at 2.4 from the previous print. There's no forecast right now. And the core PCE at 2.8. So my concern coming into next week would be that this actually prints higher. So if we print 2.9 or worse, I mean, I would think anything greater than 3% would be bad news for the market. A 3% core PCE is not good. Okay, because if we look at historically, core PCE is one of the Fed's primary measure of inflation. If we look at the history here, it wasn't that long ago. So from 2.9 down to 2.6, back up to 2.8. If we print a 2.9 or 3%, I don't think that's going to be looking good. So again, Fed is probably not going to do anything based on what we see with their watch tool. They're going to be pausing through most of the year, maybe a June cut. This is, again, pretty much baked in for no action on the 29th, which is next Wednesday. Probabilities here. Well, this is a lot different. What the hell? Okay, this is totally different than what we had literally on Monday. Okay, so let's make some sense of this. Now, we have our, okay, let's dive into this. So notice how the columns have gone to the right. Now we actually have a small percentage that shows the Fed might be hiking later in the year. Okay, now it's not the highest probability, but the fact that it's on the chart means like it's not a 0%, right? It's not a 0% that the Fed would be hiking this year. But what we do have is pause through May. That first cut would be coming into June. And by, okay, never mind. So the probabilities just go way out to 2026. This whole thing got updated. I was like, why does it look so different? So we're still the same as we were in 2025, which is a cut in June and then nothing for the rest of the year. Possibly a mix between October and December for another possible cut. It would go into early 2026. One more cut forecasted for, and that's a slim probability. Like we've got 31.7 for a pause, 31.8 for a cut, but I'm just going with the blue shaded zone. And then would we hike after that? That's silly. Would we cut after that? So honestly, this Fed stuff is all over the place. 2025 still looks about the same. Meaning if the Fed's going to cut, it would be summer. It'd be June of this year with basically 5 months of data coming in. How's inflation doing? Where the market's at? Let's watch the dollar. Let's watch the 10-year yield. You want to find out where the pain is? If yields go higher, there's going to be pain in the equities market. It's almost impossible not to have that. But if the yields are dropping and the dollar's dropping, then it gives us some slack in the yield market. Maybe things lighten up a little bit. Equities could still justify some higher highs. Valuations are quite high. Earnings would have to prove to be as good as expected. And, earnings are pretty much priced to perfection. The bar's pretty high. And I would say this, going into next week, we have Mag 7 earnings, a couple of them. We have Tesla, and we have Meta, we have Microsoft, and we have Apple next week on Wednesday and Thursday. I know the market has kind of rotated out of Mag 7 early in the year a little bit, but I still think that they are a big contributor to what's Mag 7 earnings, what's arguably the strongest companies in the world, what's their earnings? Is it beating expectations? The average miss is punished way more than the average beat. Okay, so if the market is beating expectations, the average move for the S&P 500 is like 2%, but the average miss is down like 4 to 6%. So just keep that in mind trading earnings. I mean, Netflix was a good example. Netflix ripped on earnings and the expectation was about 10%, went up 15%. Cool. So we could have a lot of volatile price action through earnings season, which I'm okay with. I just want to be careful about how I price things out, make sure I'm trading things that are liquid. I priced in something on Tesla yesterday that actually might be interesting to look at for today. Tesla's earnings are Wednesday after close. Okay. High PC good for the economy? No. I mean, right now, no, not with higher inflation, because if core PC is going higher, that means the Fed from being restrictive, that means that they're then, if we have PCE coming up and the Fed has already cut 100 basis points, we're now getting less and less restrictive. So the fear is that we would have the inflation readings would start to go possibly inverted. Going from 3% to 4% is a big move, but I feel like once like inflation is kind of coming back out of the box, it's hard to stop it. Especially if we're talking about a president that's saying cut rates. I demand we cut rates. Okay, that makes sense on paper. It makes sense to say it, but if we can't do it without stoking inflation and having a major second wave of inflation, that would crush the economy. So again, saying and doing are two different things. Does the country have all the faith in the world that Trump can fix everything? We're going to find out, because if any time the guy needs to fix stuff, it'd be now. And it's one man. And there's a whole government to deal with, and I don't think it's an easy task. But he'll basically shame departments into doing it. He'll troll them until they take some action. We saw it back in 2016 to 2020. I mean, he bullied the Fed, and we actually had some dollar price action. So anyway, we'll find out. Is the Fed watch tool actually of any use? It's of use because it's been spot on for 15 years. This thing has not been wrong since the surprise in 2009. Other than that, this is the Fed's tool that is transparency. Now, the reality is a lot of this stuff, when the market catches wind of a rate cut or the market catches wind of a pause or rate hike, a lot of times the market prices this stuff in. But as far as looking at where this information is flowing and changing, I mean, this looks very different. A lot of this just because if we go to the current, we are finally out all the way. The big difference that I see today is we're showing the watch tool all the way out to 2026. Okay, so we're currently sitting at 425 to 50. If we go out to the end of the year, the highest probability is that we're down about 25 basis points. So that would signal that this year, the highest probability is that the Fed cuts one time. Okay, and going out to 2026, the highest probability is that the Fed is down another 50 to 75 basis points. So per this tool, and this, again, this is what the market is kind of looking at right now, but is this optimism to show that the Fed is going to be continuing to cut rates a little bit through 2026? Maybe this year's more of a pause. We make sure that things don't get overheated and the market doesn't break down and have a recession, but the Fed would be still looking to try to cut. Again, it's all subject to change. If things get rough, then there's just going to be more pause. I mean, right now, I'd say the Fed does not want to hike rates. They don't. That would look terrible, and I would say the Fed would lose a ton of credibility by a major miscalculation in monetary policy. If they go from 100 basis points cut to then raising rates, I think that the Fed credibility would be, trashed. So, and I don't think they want that. And I think for that standpoint also, that's why they would rather not be cutting aggressively more. So a pause through most of this year, maybe one cut for this year just to make sure that things don't get overheated. But that, again, it's like, look at how this reacted last year when the Fed was talking in 2024, we're going to pause. April had a pullback, a 5% pullback on the S&P, like 6% in the NASDAQ, bonds were down, crypto was down, like it was restrictive. And then after that, the market caught wind of like the Fed's going to cut. And so they started to rip higher. The market was speculating on Fed's going to be cutting. So they priced it in. So all that is, it's like either the market is pricing in like what the reality is now, but usually the market is forward thinking. So depending on how much restriction the market is pricing in for this year, I mean, we're back up to all-time highs. S&P hit all-time highs. Congratulations. You just had like a gap-filled 10-day move that is just right back to highs.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.